Before we prepare the income statement for ABC Clothing Company, it's important to understand what an income statement is and why it matters. An income statement, also known as the Statement of Operations or Profit and Loss P&L statement, is a financial report that outlines a company's performance over a specific period, typically a month. It highlights the company's revenues and expenses, showing how well the business has managed its resources to generate income. The key components of an income statement are the revenue and expense accounts. The primary goal of running a business is to be profitable, meaning revenues should exceed expenses. When total revenues are greater than total expenses, the company achieves a net income. Conversely, when expenses exceed revenues, the result is a net loss. To assess how ABC Clothing Company performed during the period, we need to look at how the company utilized its resources, assets, and analyze the results through the income statement. By doing so, we can determine whether the company generated a net income or incurred a net loss. Now, let's evaluate the accounting equation, which includes the 10 transactions that took place during this period, to better understand ABC Clothing Company's overall performance. Since the income statement is made up of revenue and expense accounts, we will focus on those accounts under the equity section of the accounting equation to prepare it. Revenue accounts are listed first in the income statement. In this case, there is only one revenue account under the equity section, which is sales revenue. Therefore, this will be the only revenue account shown in the income statement. The total sales revenue is $65,000. After recording the sales revenue and its total in the income statement, the statement will appear as follows. Next, after listing the revenue accounts, the expense accounts are presented in the income statement. For ABC Clothing Company, there are 3 expense accounts to include: cost of goods sold, salaries expense, and utilities expense. Cost of goods sold totals $20,000, salaries expense totals $6,000, utilities expense totals $1,200. Once all expense accounts and their respective totals are recorded, the income statement will look like this. As you can see, the total of the 3 expenses amounts to $27,200. Since expenses represent the costs incurred to generate revenue, the total expenses of $27,200 will be subtracted from the total revenue of $65,000. This leaves us with a net income of $37,800. Revenue of $65,000 minus expenses of $27,200. With the net income calculated, the final presentation of the income statement will look like this. In the next video, we will prepare the Statement of Owner's Equity for ABC Clothing Company.